Hey, it's Clay at claytrader.com. I want to talk about the most common mistake I see new traders, new investors make when they're just getting started. And up front, none of this is theory, okay? I'm going to be using some of my personal results that show how this can all play out and how it should be done. And this is also a situation where it's not just my personal experience that I've gone through this and made this mistake, but I've been, helping, coaching, teaching, whatever you want to call this, since 2013, and I've seen this common mistake come up over and over again. So I assure you there is no theory here. And for those of you that have some experience trading, I'm sure what I talk about, you're going to say, oh yes, I know exactly what you're referring to. So what I want to do is just give you a little trick that I like to use and that can really help me out avoid this very tricky situation. And the reason it really is tricky is if you've ever done this or if you've ever been tempted to do this, it's not that you're stupid. It's not that you're not intelligent enough. It's not that you don't have the abilities to be a trader. It just means you're a human being. It means that you just actually kind of paid attention to society because society says you should approach certain situations in one way, which is actually true. I mean, in the vast majority of times, the way you approach and respond to a situation, well, that's great. That is how you should do it. But again, that's the tricky part, is what society says, what your emotions are telling you to do in the world of trading, not what you want to be doing, because it can lead to some very painful situations. So like I said, no theory here, so I want to establish a little bit of context here. But on this morning, that was the first trade that I had made, and these represent where I was buying, and then eventually when it was time to sell, I sold right there. And let me just put it this way, I sold for less than what I had been buying, meaning I had an opening loss of $1,900. So that is the context here. $1,900 loss opening trade. So at this point, I had two reaction choices. Or for you, same thing. You're going to have two reaction choices. You take a loss, and I should note that this loss is going to be something bigger than that you would consider bigger. So for me, if this was a $25 loss or a $50 loss or a $100 loss, this video that I'm talking about here would not apply. But in this situation, yeah, $1,900 for me, that's a good size loss. So I need to apply these rules that you're going to see here play out. So there is that little give and take. What a big loss is to everybody is different. But for me, yeah, $1,900 was a bigger loss. So that's where, everything I'm talking about here definitely applies. But at this point, for me and for you, you have two reaction choices. You can react with, I got to fight back. Let's get it done, and that's what society tells you to do, right? You know what? Life's not fair. Life can be difficult, but it's how you respond, right? And you got to just respond, fight back, hustle, grind, don't give up. So that's the first possible choice. Or you can just admit defeat. And on the surface, that looks really bad, right? Just wave the white flag, surrender, admit defeat, give up, all those things. That sounds pretty bad from what society would tell you to do. But let me add in some additional context here, and let's take a look at the underlying emotions behind both of these reactions. In many cases, like I said, been doing this since 2013, so I've seen plenty of situations of this, and then, myself, usually the underlying context is frustration, anger, just so annoying, and so you want to fight back, but your desire to fight back is grounded in a very, very negative context of just pure frustration, anger, and annoyance. Or just staying cool, calm, and collected and admitting defeat. That is the winner. Admit defeat. You got to admit defeat. Give me a chance to explain, because I do realize this sounds really bad right now, but admitting defeat, how does it all work? Well, this is 3 steps. The first step is right here. It's going to be a red day. If you're maybe new to trading, red just means a losing day. So admit to yourself, I'm losing money today. It's going to be a red day. Step 1, just admit that to yourself. Wave the white flag. You know what? It's going to be a losing day. But again, this is why it goes back to, for me, if it's a $50 loss, I don't need to go through all this, because I can make $50 back quite easily within a single trade. But $1,900, yeah, not nearly as easily. So for you, who knows? If you have a massive account, maybe it's going to be a red day is $5,000. Maybe if you have a smaller account, maybe it's going to be a red day is $500. Like I said, give and take for everybody. But when you do reach that point, just admit, step 1, it's going to be a red day. Step 2, tomorrow is a new day. Keep things in perspective. It's not like this is your last day ever of trading. Tomorrow is a new day. And I envision this like this because you're going to have all sorts of emotions, quite literally, raining down on you. from all different directions, but you got to just stay cool, calm, and collected, which just looks like this, repeating steps 1 and 2. So it's going to be a red day, but tomorrow's a new day. It's going to be a red day, but tomorrow is a new day. And you just repeat that over and over again, and you drill that into your mind. And then step number 3, just find some green. Find some green. But listen to this right now, because if I was forced to choose just one lesson that you take away from this video, this would be what I would want you to remember. So listen here. When you find some green, the idea here is just to find some winning trades. But I want you doing all this, and you may not increase your position size. Let me repeat that again. You may not increase your position size. So if you normally use 100 shares, you can't sit there and say, you know what? Now it's time to use 200 shares. But now to defend you, not defend you to do it, but this is what I mean. This is how things are tricky, because mathematically, yeah, you're actually right. If you increase position size, then you can get the loss back mathematically that much quicker, because now you're using bigger size. But there's more to trading than mathematics. There's that whole emotional side. And when you have bigger position size, and then you factor in, some other things that are going to be going on, which I'll cover here in just a second, you are putting yourself in some very, very dangerous situations. So as a general rule, you may not increase your position size, especially as a beginner. In fact, as a beginner, I would say you need to decrease your position size, lower it. So if you're, again, going with that 100 shares, go down to 75 shares, go down to 50 shares, but do not increase. It's very, very tempting, because once again, the math says, I got to get that back. I got to make back my loss. Well, if I increase that position size, okay, I can get it back that much quicker. The math is not wrong, but the math is just math. It doesn't factor in emotions and all of that, and those are very, very important parts. So as a beginner, just decrease position size. Now, if you're experienced, I'd say consider reducing your position size. And for me, this is a case-by-case situation. Not every situation is different or is the same. But I mean, I've been doing this for over 10 years now, and you'll get there too eventually. But my point is, there does reach the point where you get to know the voices in your head. You get to know the different emotions that are trying to show up, so you can plan and kind of arrange things around those voices. So for me, sometimes I'll just leave the position size the same. Sometimes I will reduce it. But as a beginner, like I said, when you're still trying to kind of find your way, just play it safe, err on the side of caution, and decrease your position size. And then the next part here is, what is the goal behind this? And then we need to talk about that risk. But the goal is very simple. Let's just recharge your confidence. I don't care how big or small the loss is. I mean, it's going to take a little ding on your confidence. Now, I'm not saying that you totally are going to want to give up. I'm not saying that you are going to think that you're the worst trader ever. I suppose maybe some trades you might go down that rabbit hole. But in many situations, it's just a matter of, I took a loss. I was wrong. And the little kind of extra bit, the cherry on top of trading, is when you were wrong, which us as human beings don't really enjoy being wrong. But like I said, that cherry on top in the market is, oh yeah. And being wrong implies you lost money. And this is not monopoly money. I mean, you can't get it back. So yeah, that always puts a little unique twist for our lives as traders and investors, that, yeah, it's wise to recharge some confidence. And you recharge some confidence, again, by just finding some green, get some green trades. And then the other thing it's going to help do is just, well, from a practical standpoint, we need to start climbing out of the hole, right? There's a hole, got to start climbing. So that's going to allow us to start to climb out of the hole while we recharge our confidence. Key thing here, one rung at a time. One rung. Don't be trying to do 2. Don't be trying to do 3. Or, sometimes, once more, I've been there. You try to jump out of the hole with one leap. Okay, we're not trying to be Superman here, okay? Just one rung at a time. And the tricky part and the cruel part is sometimes that actually works. You take one big jump because you cough, increase position size, and then all of a sudden you're out of the hole and thinking, oh, wow, that was easier. I'll just do that from now on. And maybe it works again. But one of those times it's not going to work, and that hole that you were in just becomes massively, massively larger. And then within the big picture of things, yeah, your whole trading landscape really begins to change. So just take it one rung at a time. Remember, it's going to be a red day, okay? So just take it one rung at a time. Let's recharge the confidence. Now, the risk here is what I call blurred vision. So what is blurred vision? Well, let's go through the solution and you'll see kind of how this plays out. But the solution to blurred vision is this. Always take a second look and ask, Are you sure the setup meets all your requirements? So in my case, Clay, are you sure what you see is actually what you think you see? Does it actually have all your requirements? Or are you just kind of pretending? Is your vision blurry and you're seeing a trade that doesn't really exist? And this is a very common problem, is where people start to, because, in the back of their mind, that underlying emotion, okay, we got to get it back. We got to fight back. We got it. Let's go. Come on. We got to get it back. Oh yeah, that looks good. If you had a clear, vision, you say, no. Yeah, I mean, that looks good, but those other couple things don't meet your criteria. That's not your requirements. And I would rather have you miss a trade because you're taking a second look than take a trade that doesn't meet your requirements. Because why does it matter? Well, I don't want to miss a trade, but step 2, tomorrow's a new day. Everything will be okay. So be very, very careful for that. Blurred vision can be very tricky, but that's also why I'm having you reduce your position size as a beginner. Because that's one of those things where the more experience you get, you're going to become very good at realizing if you have blurred vision or not. But when you're just brand new and getting started, you're not going to know you're not going to be able to recognize it as easily. So even if you do fall into the step where or you fall into the trap where you force a trade and it doesn't meet all your requirements, at least it's with reduced position sizing, right? So that's kind of a counteractive measure. By reducing position size as you figured out your blurred vision, that'll still help keep you on the right track where you don't all of a sudden blow up your account. The last thing I want is for you to not have any experience with blurred vision, and then you're going out there by increasing your position size. That is a total recipe for disaster. So hopping back into my example, how did this all play out in the real world? Again, I started off with that negative $1,900. So at that point, I just said, you know what, Clay? It's going to be a red day. It's going to be a red day, but tomorrow is a new day. It's going to be a red day, Clay, but tomorrow is a new day. And so you know what? You know what, Clay? I'm frustrated. I'm not very happy with that, but let's just go out there, find some green, because I'm going to be red, but tomorrow's a new gray. Tomorrow's a new day, so let's just find some green. So those were my final results on that day when I had that opening $1,900 loss and ultimately closed down $270, which had me feeling so good about myself. If this sounds counterproductive, it sounds counterintuitive, but sometimes these days where you lose feel better than winning days because you know that you didn't, make anything worse. And not only did you not make things worse, you were acting in a disciplined way that brought you back to, in this situation, not like it was a green day, not like it was even a zero break-even day, but a whole lot more progress than being down negative 1,900. And I felt absolutely awesome. In fact, in the comment section, can you relate to this? If you've been trading for a while, have you ever been there where some of these red days actually feel better than the green days? Let me know in the comment section. I suppose just let other commenters know because I realize that sounds crazy. Wait, how can you think that a red day feels better than a green day? I assure you, the human mind's a tricky place, and just the self-satisfaction of knowing that you followed rules, that you stayed disciplined, that you didn't let the emotions take over, there is great feeling in that. And then the new day. So the next day happened. And what all occurred? Well, these were a couple comments from the chat room early in the morning before the market opened up. And, I was talking a lot about FedEx and how the 151 level was a very important area and how I'd be paying attention to it. And then you can see a little conversation I had with, one of the other members. Point here being that in the chat room, I was talking about 151, and the chat room is part of the community that I offer. I realize that might not make sense if this is the first video you've ever watched, but I do offer a community, and part of that community is a live chat room. So here's just some, like I said, some comments from there. But FedEx was the primary ticker that we were all watching, and then there were my trades on that morning. So again, the very next day, the new day, and within 2 minutes, actually less than 2 minutes, but we'll keep the math easy, and 2 minutes, and you add up those trades, and they amounted to $1,109, which, boy, that escalated quickly, but in a very, very good way. Think about that. Previous day, totally wiped away, and now I'm up solidly in the green because I accepted the previous day was going to be red, but I knew that the next day was a new day, and I just found some green. And then when the new day came, back to my normal strategy, so a normal position sizing and all of that. And there you go. Within 2 minutes, well within the green of both days combined, because I just decided to admit defeat. As weird as that sounds, admit defeat. And you're going to keep things going in the right direction. You're going to keep, you're going to avoid those mistakes, right? So how do I avoid, making things worse? You avoid it by simply acknowledging the fact that, hey, I need to give up. I need to surrender. I need to admit it's going to be a red day. And then you just apply those next couple of steps, and it's amazing how things all work out. So if you enjoyed this video, a couple of things, hit that like button, and that's how I gauge, should I keep making these videos? And if the likes stay strong, then yeah, I'll continue to take time out of my day to make these sorts of videos. Also, leave a comment down below. Besides the whole thing about, have you ever felt good about a red day? Just let me know, have you ever experienced what I'm talking about, where you make a trade, you lose, and then all of a sudden you make it worse? I mean, like I said, I know I've been there. I think it'd be, if we could collect some horror stories down there, that'd probably be good for other readers to know that I'm not just talking out of, just talking in theory, because it's a very common thing. You're not alone. So yeah, horror stories are always very teachable. So if you're willing to leave one below in the comment section, that would be great. And then also, any suggestions for future videos like this, please leave those in the comment section below. I'm always looking for comments and feedback and suggestions for that. That would be very helpful. And then also check out the channel as a whole, and hopefully you decide to subscribe. I did mention that chat room and how you can trade alongside me and get trade ideas and trade alerts and all that sort of stuff. So if you're interested in learning more about that and joining my private community, you can go to justclaytrader.com/team. So thank you again for hanging out. And if nothing else, just hit that like button and subscribe to the channel, and I'll see you back for the next video. Take care. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.